Investors in South Africa's mining companies have been unsettled in recent months by talk of nationalising the industry. For the country's coal mining firms, the outlook is further undermined by forecasts that benchmark coal prices are set to fall in 2012. With us live now from South Africa, Don Turvey, Chief Executive of Continental Coal. He joins us as the company starts its first day of trading on the London Stock Exchange's AIM market. Don, thanks for talking with us. You're already listed on the Australian exchange. How much cash do you hope to raise from the AIM listing, and what are you going to use it for?
Well, we're not requiring cash for this listing. It's a compliance listing. We're fully funded as we speak for our third mine development. So it's essentially accessing a broader investor base.
How big is the threat to miners of nationalisation in South Africa? How much is it more to do with settling scores with the ANC?
Well, the way we see it, and I mean, we've heard many senior politicians, including the Minister of Mines, speaking against nationalisation. So we see it as, at the moment, as really airing a debate that needs to be had. But, the government, as far as we know, is against it. It's not their policy. So it's really just going through the process. At this point, we're not affected by it. We're carrying on with our business and have been doing so. I mean, we know the South African environment very well, and we've been very successful in it.
Are you confident of achieving a government mandate that mining firms need to have 26% black ownership, 40% black management by 2014?
Yes, we're already there. What we've done is when the company started, its 26 black empowerment partner was Masao. We've recently made a deal with the Sept Development Trust. They're coming in now as our partner. And with that, they bring also funding. So they already have the support from government because they're a shareholder, a BE shareholder in Kumba. So it's a very important milestone for the company.
What to talk about export capacity shortage? It seems you haven't got enough export capacity to ship what you want to. What's the solution for Continental Coal?
Well, we have enough capacity to export the coal that we produce, and we have been doing that since November last year with our second mine, Ferreira. That's the mine I'm standing with right now. So we can produce and export the coal that we produce here. We have a capacity at the bay through our own capacity, and we also sell through third parties. So we managed to move all the coal, export coal that we can produce.
What's your outlook for demand and pricing over the next 12 months?
Well, the coal prices have remained quite strong in the recent 6 months. The forecast still remains an upward trend. There's many factors that's influencing it. I think recently also the government of Indonesia wanting to put a clamp down on some of the low quality coal exports there, which will have a huge impact on the market. However, we still see a rising demand out of the east, specifically China and India, and hence pricing remain very strong.
So you do continue to see increasing demand for sub-spec South African coal from India as well as China?
Absolutely. The demand out of India is strong. I mean, last month it was something like 1.5 million tons that went to that market. So we still see and they keep on building power stations, and as that ramps up, that demand will increase.
Just a final word on Glencore's plans. They of course want to take a controlling stake in Optimum Coal. Is that a good thing or a bad thing for the market, do you think?
I think it's a good thing. I think a company like Glencore making a go at or buying out Optimum, they're saying they see a future in South Africa. In fact, so much so that they're willing to spend that sort of money. So it's really a vote of confidence in South Africa and also the export capacity in South Africa.
Okay, Don, thanks for talking with us. Don Turvey, Continental Coal. Join us again at the bottom of the hour for an in-depth analysis and commentary from our Breaking Views team this morning. I'm Axel Threlfall. This is Reuters.